This is the strongest reading since October last year. New orders led to a rise in output for the first time since November. This means that the first quarter could have ended with a new high momentum that's likely to get carried into the second quarter. While electricity constraints have eaten into economic growth in the past months, fewer load shedding incidents may have helped the economy.
The reduced frequency of electricity load shedding has obviously enabled the economy to grow a little bit faster, economic activity to pick up somewhat. Therefore, one of the major risks is if that energy constraint tightens once again, if we see more prevalent load shedding like we did in January, in February, then that would obviously weigh on the overall PMI outlook and the PMI readings.
Private sector employment ticked up in March, suggesting increased hiring in response to higher demand. The rise in domestic output was countered by weak export orders, which contracted for the third consecutive month. Faulkner says the impact of the lower oil price is beginning to feed through into the economy.
Up till now, we have seen it feed through into disinflation, both in terms of purchase prices and input costs in the economy, but also output prices. But interestingly, what we saw in March is that those sub-indexes started to rise again. So we've seen them track down for many months, but now we've seen them start to rise. And one would expect to see that. We saw that really with the adjustments in the fuel price, both in March and now in April. So we expect that really inflation has bottomed, that consumer inflation has bottomed, and it will start to rise slowly going forward over coming months.
Mining and manufacturing data is due out this week. HSBC expects a rebound in the mining data, while manufacturing is seen contracting in line with the latest Kagiso PMI and a low business confidence index. Diabo Seto, SABC News, Johannesburg.